Good afternoon, ladies and gentlemen, and welcome to the SYLVANIA Platinum Limited results presentation for the year ended 30th of June 2020. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard. I would like to remind you that this presentation is being recorded. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Jacco Prinsloo, CEO, and Luan Kaminatri, CFO of SYLVANIA Platinum Limited. Thank you. Good afternoon.
Good afternoon, everyone, and thanks for joining us and making the time to join us for our results presentation. And also, I think worth noting it's the first live results presentation on this virtual platform. So thank you very much for joining us. I think maybe just by way of introduction, I thought maybe just some background with me and Luan. We have recently been appointed from March this year as the new CEO and CFO, with me taking over from Terry. But we are by no means new to SYLVANIA, and Luan have been a bit before me for about 11 years with the company, and I'm just almost on to 9 years now. And especially during the last 5 years, we both of us worked very closely with Terry as CEO, and also with our existing board. We've been working very closely, so I think we all aligned, and as I said, have been following this the executive around for quite some time. I'm going to start off the presentation just by means of an overview of the company, and I'll go to full screen so that you can just have a better one. I'll do a bit about SYLVANIA and then going into our two different streams. SYLVANIA is a mid-tier PGM mining company that has been in operation for a number of years now, and focusing specifically on generating wealth for our shareholders, and by applying safe and innovative processes to focus specifically on PGMs, but also in the process exploiting value-added associated minerals in the current environment where we are beneficiating chrome with our PGMs for our host mines, and then also in the future exploration projects where there are some base metal components. There are two distinct almost streams to the current SYLVANIA business at the moment, and the first one being our SYLVANIA dump operations. And so far, these are the operations that have been adding all the ounces and producing all the ounces for the company, and also generating all the revenues. And then the second part is our exploration asset stream. First, focusing just a little bit on the SYLVANIA dump operations. We currently have 6 operating plants in operation, beneficiating PGM and chrome, and they are located on the eastern and western bushveld respectively. And at the moment, all our mines are on Samancor Chrome's property as the host mine. Important is we always talk about our PGM recovery and figures, and that's what we generally publish on all our reports. But also significantly, we are recovering a significant amount of chrome for our host mine, but because we return that in a nominal value under our commercial agreement with the host mine, we don't record any other chrome numbers in our financials. However, with our agreement in terms of resources, we have the exclusive right to reprocess all the tails, historical tails, as well as the current arisings and ROM arisings from the host mines where we located. And I say that because Samancor have subsequently, since our agreements have in place, acquired some new operations where there are other tailings operators who were already on site with their own commercial agreements being honored. So at the 6 complexes where we are, we have those exclusive rights. And looking at our platinum price forecasts, the basket price outlooks, and our production profiles, we have a profitable operational life of at least 10 years. And we're constantly looking at the potential of extending those horizons through the adding resources where possible. From a production point of view, we have through our plants steady state capacity of about 75 to 78,000 ounces, depending on the grade. You will notice we said later in the presentation that we are targeting approximately 70,000 ounces for this next year, and that's based on the host mine ore profiles and our operations. If I go to the second stream of our business, and that's specifically looking at our exploration assets, this map will show you just the location of our operations, and maybe just for reference, the operations I spoke to in the previous slides are these orange circles on the eastern and western bushveld respectively, and it entails our Millsell, Mooinooi, Lennox, Lesedi, Doornbos, and Tweefontein operations. And then when we come to the exploration assets part, it is our Volspruit, Grass Valley, and Northern Limb projects to the north of the map, and on the northern limb of the bushveld complex. Now, just in summary, what those projects entail. So we first of all have the Volspruit open cast project, or shallow mining project, which is on the southern end of the northern limb, with where we have existing mining right in place, and for PGMs and also base metals, copper, nickel, and chrome associated. It is a project of a life of mine production of around 3 million ounces, and then also quite significant, about 270 million pounds of nickel. And then the Northern Limb project that composed of two smaller projects, is the Hacker and the Aurora projects, where we also have a mining right in place, and that has about 13 million PGM inferred resource. What is worth noting here is at this Northern Limb exploration, where we have attracted and reported an impairment of approximately $9 million on the Aurora project for this financial year. And I think maybe worth explaining the rationale behind it, because a lot of you might ask, why would a company at the height of the PGM market and environment, price environment we are now, and while we're announcing we have increased focus on these projects, impair a project like that? I think historically we've looked at executing this Volspruit and Northern Limb projects as one combined almost mega mine type project, and therefore we've run the impairment models on the combined project. Now, with us looking at more localized, higher grade, attractive projects that we probably can execute with lower capital, lower risk, we're now evaluating these individual projects on an individual basis and for impairment. And unfortunately, with the amount of available information on the Aurora project to date, it didn't pass all the applicable tests for impairment, and we've attracted that impairment. Through the studies we have initiated to look at these projects, and I'll deal a bit more about it later, it might well be that we discover there is more value to the project, in which case we will reevaluate it in the future. But at the moment, we have attracted that impairment. When we look at Grass Valley, at the bottom, Grass Valley is an open pit mineable high-grade chrome resource. I think most of you would know we have announced in August last year that we have received a cash offer of about 115 million rand. That's just short of $7 million for the project. There was then an original 8-month due diligence period, and for the purchasers to sort out their financing requirements. But unfortunately, with the chrome market deteriorating quite significantly since late last year and then into this year, combined with the COVID impact this year, that process has been delayed, and the purchasers haven't been able to finalize the financing for it. And we have then decided to grant a further 12-month option to these guys to finalize all their financing and due diligence, and so hopefully for us to conclude the sale. So that's where we are on these exploration projects. Just in terms of the past financial year's results at a glance, I'm going to take you through the operational part of it, and I'll hand over to Leanne as a CFO for the financial snapshot. But let me jump into the operational part of it. Firstly, I think many of you have seen when we came in, put our previous presentations announcement out at the half year, Slovenia was well on track to achieve, our guidance we've provided to the market of above 76,000 ounces. We had 40,000 ounces at the half year produced already, but unfortunately, with the impact of COVID, that necessitated us to shut down our operations for a 6-week period during the national hard lockdown by the South African government in order to address the COVID. We have lost about 11% in treatment tons through our operations. We're ever quite fortunate that the PGM recoveries were significantly up, and that's 15% up year on year. And that helped us to mitigate some of that impact, that overall the PGM production was only down about 4% for the financial year, with COVID costing us approximately 10,000 ounces. Just for a moment, stepping back to the recovery, I think you would see that we've increased to about close to 57%. The big contributors there is, first of all, it's the success in the rollout of our Project Echo modules, Mooinooi MF2 being the last one to have been commissioned towards the end of 2019 financial year, and also the front-end optimization project we did at Lesedi. And those two projects only contributed for the full financial year for the first time during 2020. So that helped significantly to improve the recoveries. And then also we had a higher mass pool philosophy in order to improve recoveries. That part of the strategy is not necessarily sustainable going forward, because we have to meet certain minimum requirements of concentrate quality to our smelters, and we will therefore bring the recovery slightly down into the next year. And I've communicated in our annual announcements that we would target probably between 52 and 54% recovery for the next financial year. With all the production behind us, just before we go into the financials on the next slide, the PGM basket price obviously had a 58% year-on-year improvement to $2,015 an ounce, was a significant contributor towards our financial successes for the past year. And it's particularly in terms of rhodium that was up more than 160% year-on-year, and palladium close to 50% year-on-year improvement. And we were fortunate to benefit from that. In terms of safety, health, and environment performance for the company, we have been fortunate for a mining company to have had a spell for 12 or 13 years without recording any fatalities. And we are fortunate that we've been able to have the safety record like that, and we're doing everything in our power to keep it that way. We haven't had any significant health or environmental incidents on the operations, barring obviously COVID on the health side that required us to implement a couple of interventions during the last half year. Because we don't have any fatalities, the next significant parameter we use to measure safety in our operations is lost time injuries. And while we unfortunately recorded 3 for the year, 1 at Mooinooi, Lesedi, and Lennox, respectively, related to primarily slip and fall and hand injuries, we also had 3 operations that have exceeded 5 years without having a single injury where a person missed 1 day from work. And I think by industry standards, those are significant safety achievements. Overall, I think barring the impact of the COVID, we had an excellent year from an operational point of view. And I'll hand over to Leanne now to take us through the financials, which also is very promising.
Thanks, Jaco. Before I start with the financial snapshot, just a reminder that Sylvania generates its revenues in USD, but all our SDO costs are incurred in South African rands, so the exchange rates impact us quite significantly. Looking at the top of that slide, the gross revenue, group revenue, increased from $114.1 million against last year's $70.5 million. It's a 62% increase year on year, and attributable mainly to that 58% increase in the basket price. The group cash costs increased to $636 per ounce against the $556 per ounce in 2019. This increase is mainly as a result of the impact of COVID, and the SDO not producing ounces for almost 6 weeks. During this time, the company paid all employee salaries and incurred fixed costs as well as care and maintenance on the plants. In addition to these costs, we also had higher than inflation increases in electricity and also higher remining costs on the dumps, which impacted the cash costs. The group's G&A costs increased from $2 million to $2.17 million. That's an 8% increase on the prior year, and mainly due to the increase in share-based payments expense on bonus share awards to senior management and directors. The group's adjusted EBITDA improved 130% to $69.6 million against last year's $30.2 million. Again, this is on the back of the improved basket price. This then filters down to a record net profit of $41 million, 125% improvement on the prior year. The net profit is after taking the $9.5 million impairment on Aurora into account, as well as $15 million in taxes. That all then brings us to an earnings per share, which increased to 14.62%, 130% increase on the prior year. Group CapEx for the year decreased 35% to $5.4 million against the prior year's $8.3 million. The decrease is largely as a result of almost no spend on Project Echo during 2020, as all the planned modules were completed in the prior year, except for Tweefontein, which has been delayed due to the power infrastructure. Thankfully, COVID had little impact on our CapEx spend or projects. Then lastly on that slide, but by no means least, the dividend that's been recommended by the board for 2020 is 1.6 pence per share. This is just more than double what was paid in the prior year and was calculated based on the company's dividend policy on our website. Some of the factors that were taken into account include the working capital requirements, committed capital and planned and expansion growth capital, and being able to sustainably pay a dividend in the future. It should also be noted that the impact of the zero production in April will only be seen in the cash flow for the company in Q1 of financial year 2021, as a result of the 4-month payment delay between delivery and payment from our smelters. In addition to these factors, the board also had to consider the possibility of a second wave of COVID and the potential cash flow impact thereof. Although the board does recognize that at the current metal prices that we're experiencing and will hopefully continue to experience, that we're going to generate significant cash for the business. And that's why they're considering the once-off metal price windfall dividend, which Jaco will discuss in detail a little later.
Thank you, Luanne. And I think maybe just to shed some light on related to the results we've just taken you through, some of the major challenges during the past year and just how we dealt with it. I'm going to briefly take you through. The first one is the impact of COVID and the South African government imposed lockdown. I already indicated in that slide, we have looked at about 10,000 ounce production lost, but we've been able to mitigate the rest of the impact quite a bit after. The next slide deals a bit more in detail with the COVID, so I'll touch on that a bit more just now. The other very significant one, and you guys would have seen the last 2 or 3 results announcements we've put out in the past quarters. We have mentioned that there were retrenchments at some of the host mines where we operate, and that's primarily because of the pressed chrome market. So at the moment, particularly in this past financial year, from about March, April, was the impact from the Samancor, Moenway and Lannex operations that they've published and announced. So those employees for the underground mines did not return to the operations post-COVID, and we've already started incurring that impact during May and June. So what that entails is that we will get lower current arisings and raw material at those mines, but Sylvania have the flexibility at our operations, at all of our operations, to substitute that material with current historic dump material. And that's one of the big benefits of having the historic dump material also present. However, those dump material generally are coming at slightly lower PGM grades, and also at a lower PGM recovery efficiencies. And that's why I've highlighted that the net impact will probably be about 10 to 15% on our ounce profile on the year going forward. That's already built into the 70,000 estimate that we have mentioned. We are, however, continuously looking with our host mines at other opportunities like open cast resources to explore and see as a substitute for the underground feed that's being lost, and we continue to work with them in that regard. The other two relates more to the logistics around the mines, and that's the power and water. Power infrastructure during the past year has been still had some impact on us through the combination of load shedding and then also the distribution interruptions from the power utility to our operations. And we continue to engage with both the power utility and also the host mines to explore long-term solutions to help mitigate the impacts. The last one being the water shortages, and the two primary operations that have been impacted by this during the past financial year is Lesedi on our western limb and Tweefontein on the eastern limb. We have, through R&D initiatives at Lesedi during the past year, been successful in recovering seepage water from the perimeter of the tailings dam complexes through special drill holes to return water and alleviate that problem. And we are taking those learnings and positive results from Lesedi now and applying it to Tweefontein in the next financial year. That should alleviate that problem, and we don't expect any significant interruptions or impact during the next financial year in that regard. Just briefly touching on COVID as a item and repeating maybe some of the stuff we already said and our outlook forward. We spoke about the production impact. I think from a employee point of view, health, we were fortunate enough that we've had less than 3% of the employees in the group being affected by COVID. We had in total for the Sylvania workforce about 14 positive cases since the inception since COVID arrived in the country till now, and we were fortunate that those were all mild symptoms, and the employees have all subsequently returned to work. And also we gave support to our local communities in terms of food parcel and social support. Looking forward, we have seen during recent weeks that the rate of infections in the country has slowed significantly, and that goes both for the rate of infections and the rate of mortality. And we remain cautiously optimistic that things will improve now going forward. We haven't had, as a group, any positive cases during the past 5 weeks at any other operations, so nobody tested positive or falling ill during the past period. However, we remain vigilant. We continue with our ongoing monitoring of the short and long-term impact on the employees, and also with all the preventative measures in place to safeguard employees and prevent people from being affected. There should be another impact or an increase in the infections. We have operational contingencies in place at the various operations to help us deal with the impact and ensure that we can keep operations running. So I'm going to briefly take us more in a bit more detail of the operations, and I think let's start off just with the production ounce profile. And I think from this is what I mentioned earlier. We were on a very good trend until the emergence of COVID, where 2020 would have been our 7th consecutive year of increasing and record production. And unfortunately, we with the impact of COVID, we've just dropped slightly below 2019. And we're trying to keep that profile flat into 2021, and 2022 being a bit down. I think it's worth noting, so 2021 and 2022 estimates take into account this downscaling and the downscale operation at our host mines. And the reason for 2022 being slightly lower than 2021 is that the third mine that is potentially being affected by this scale down at those mines is Tweefontein. But those mines have not been scaled down yet, and the communication from those mines will be that it will continue at least until December. And, you know, depending on what the chrome markets does, there might be the upside that it continues. So that's why 2021 is slightly higher than 2022 in that profile, because in our planning, we've removed Tweefontein as well from contributing to the operations. Just in terms of the project completed, we have put in announcements, and I think what we're very happy with, and looking especially over the past few years, the substantial increase in recoveries and the positive contribution to the ounce profile was the successful rollout of Project Echo. We've been able to commission 3 of the 4 projects destined for Project Echo, and that was the Millcell and Doornbos that was done in the 2018-19 financial years, and then Mooinooi that was done in the last 2019 financial year, optimized into 2020. And those were all successful. We've completed those projects well within our budget that we given for Project Echo. So it leaves us with the Tweefontein module outstanding, which we have announced in several previous communications, that due to the power supply stability from the and capacity from the utilities, we've taken a cautious approach not to start Tweefontein until the power is in place. So Tweefontein would most likely only be looking towards financial year 2023. However, as I will indicate on the next slide, and I have indicated in our results announcements, we are bringing forward MF2 module at Lesedi to mitigate that ounce impact and maintain our ounce profiles. The other significant project we've completed during the past year is the Lannex mill and spiral upgrade, and that was also to extend the life of Lannex. Lannex would have, based on just the historic dump material that was there and the characterizing profile, probably have scaled down or closed down about 2 years ago. And we then decided to make alternative plans with the dump resources, and also to add a mill for flexibility that we can treat open cast raw material or underground raw material. So whatever raw finds is available from those mines through that complex, and that mill has been commissioned during the past month, and we are starting to receive run-of-mine open cast material for that project. In our future projects that we've committed capital for in the next financial year is the Lesedi MF2, as I said just now. It's exact same philosophy and circuit design as we have completed at our other Project Echo modules or MF2 modules at the other plants. So therefore, there's no technology risk or surprises in it. It's a technology and a circuit design that we know works, that we've proven works, and therefore we've decided to go ahead with it. The second project there is a classification project, classification and PGM upgrade optimization at our Mooinooi operation. And again, it's a similar installation with enhanced fine screening technology that we have done and rolled out during the past 2 years at Millcell, Doornbos, and Tweefontein, again with successful results and adding positive value. So those are the projects, the primary projects that we have planned for now. I'm going to hand back to Leanne to take us through some of the more detailed financial information.
Thanks, Jaco. I've already touched on the key group financial highlights. So focusing more on SDO, you'll see the group the operating costs for SDO increased 60% year on year from $535 per ounce to $615 per ounce. The reasons for this increase are much the same as for the group cash costs and include the impact of lost production due to COVID, the electricity increases, and the higher remining costs associated with the dumps. The impact of the higher dump remining costs and slightly lower ounce profile that Jaco mentioned previously due to the host mine slowdown can be seen in the cost per ounce forecast for 2021 and 2022.
Yeah, sorry.
Looking at our operating costs relative to the industry, it shows that Sylvania is still in the lower end of the cost graph. It's important to note that this graph, which is prepared by Nedbank Corporate and Investing, is based on the 2020 calendar year. So the July to December 2020 portion of the cost is an estimate by them, which is why we're, according to their estimate, sitting at $770 per ounce. If we use our financial year 2020 actual cash costs and capital, the Sylvania costs are sitting at $713 per ounce, which moves us 2 spaces down the cost graph. Then moving on to our group EBITDA forecast, it's pleasing to note from this graph that we've made consistent or achieved consistent increases in EBITDA since 2013. The 2020 group EBITDA increased significantly on the back of the favorable metal prices. And then you'll see the solid bars for the forecast, represent the average spot metal prices for the week of 24 August 2020. This equates to a gross basket price of $2,676 per ounce. As the future is anyone's guess, we've also included the forecasts of Nedbank and Standard Bank, which are significantly more conservative, as well as sensitivities on the spot prices that we've provided. With the favorable metal prices, we often ask the question around hedging. The group currently doesn't hedge, and there's no immediate plans to hedge. And to be honest, I think if we had hedged a year ago, shareholders would be very unhappy with management today. The following graph just gives a little more information on our 4E basket. Our gross basket price for 2020 was $2,105 per ounce, a 58% increase on the prior year. And the first pie chart on this slide shows the prill split. You'll note that the star performers of the years, palladium and rhodium, make up 25.5% and 12.5% of our concentrates. This, however, translates with the rhodium price as it is, making up 46.3% of our revenue, which is quite significant. We've received and also continue to experience record highs in the South African Rand basket price, which can be seen in the black line on the third graph on this slide. Let's hope it continues for the following financial year. And to the next graph, shows our capital expenditure. The 2017 to 2019 capital expenditure bars showed increase as we rolled out Project Echo. The 2020 capex spend included mainly the Lannex Life Extension project and the Lesedi Chrome section, as well as SIB. Looking forward to 2021, the capex budget is estimated at around $9 million, and you'll see that this includes a substantial increase in SIB, as we've had to bring the tailings dam construction forward to allow for the flexibility of the remining of the dumps. This cost would have been incurred, we were just merely pulling it forward. So it's not new capital that wouldn't have been incurred. The other capital expenditure plan for 2021 include the Lesedi MF2 module and the Moino optimization project.
Okay. Thank you, Leanne. And I think let's bring us to the summary of the presentation, and I'll just try and conclude with a few thoughts. I think first of all, from our corporate strategy point of view, and it's all about value creation. Our focus remains on free cash flow generation, and we will do that by means of maintaining our production levels. We are going to produce our 70,000 ounces for the year. We're going to maintain our low costs and therefore maintain high margins. We also want to have a sustainable business so that we can continue adding value, and therefore we will optimize the processing at our operations through improved technology and capital expansion projects. And I think some of the examples we mentioned just in this presentation in terms of Echo and other expansions are proof of that track record during the past years. We're also continuously exploring and evaluating potential surface resources and projects to extend the life of the tailings retreatment operations, and we constantly in negotiations with parties in that regard. Growth of the business is significantly important, and obviously as after many years of significant growth and the profile now flattening off a bit is one of our utmost priorities, and the analysis of our exploration assets in order to consider how we're going to develop them is key at the moment, and then R&D investments to potentially diversify the business model. Returning value to our stakeholders is obviously important, and when we say stakeholders, it's not just the shareholders, where we are looking at returning dividends and also through our share buyback strategies, but also I think especially under the current market conditions where our host mines are struggling a bit with the chrome prices, is that we add value through them for efficient and low cost chrome production return to the host mines. And then also is our employees and the communities that we contribute to. Talking a bit more about the value to shareholders, I think just a summary of of the two mechanisms we have mentioned and how we've fared during the past few years. I think the first one is what we always say: we will look at the opportunistic buyback of shares when the share price is lower than internal company valuation. And we've managed to buy back about 45 million shares during the past 5 years, of which we cancelled 11 million shares. That enabled us to satisfy the bonus share award schemes without diluting shareholders, and also to enable us to put 7.5 million shares towards a vehicle where we can enable employee dividend entitlement scheme, where especially the lower level employees in the company can share in the fortune of the company through the means of dividend payments similar to shareholders, without being issued the shares and just ending up maybe selling them in the long term. So that is what we've been able with the share buybacks to achieve. In terms of the cash dividends, we've commenced our dividends in after the financial year 2018 with a maiden dividend then of 0.35 pence per share, which we've just more than doubled, going to at the end of the 2019 financial year 0.78 pence, and the board again recommending 105% improvement to 1.6 pence during this financial year. I think, as Luann mentioned earlier in her part of the presentation as well, is we have looked at the amount of cash we have available and also the circumstance around our dividend, and we would look then at the payment of a specific metal price dividend that would take into account the performance of palladium and rhodium for this calendar year. And we will distribute to shareholders the difference between a consensus value on those metals and what we actually achieve for the year. And I think, bearing in mind that we are already in the 9th month of the year, we have some indication of where that's going. But also, I think we've seen in the same financial year how volatile rhodium have been, and we will continue to focus. And that's why the board have decided that we'll make a call at the end of December, so that we can evaluate the impact on this calendar year. In terms of future dividends, we have our policy available on the website that guides us in terms of the principles, but Luann have also addressed that in quite a bit of detail. So looking at this next financial year and in our short term, our key focus areas, primarily what we said is maintain safe and profitable production. I think most important for us in the short term is steering the company through the current COVID-19 pandemic, ensuring that we maintain operational excellence and that we optimize the recently commissioned projects, and that we also deliver on the new projects to get the benefits and maintain tight cost control, that we can remain at the low OPEX margins. And in terms of the strategy for the exploration assets, as I explained when I spoke about the Volspruit and Northern Limb project specifically earlier, is that we've initiated specialist studies to determine how best to optimize the respective projects by targeting more localized higher grade areas and considering less capital intensive infrastructure. Maybe just worth expanding a bit more on that, because some people have asked now, are we planning to build a mine and go into mining ourselves that might deviate from the current strategy of low risk, low capital projects? No, that is not the idea. The original intention of the projects was that, what would have been quite capital intensive, where we would build several big concentrator modules and our own downstream smelter and refining processes, because of the grade of material produced there. And the capital estimate would have been anything from just less than $200 to maybe $300 million to execute that project. We realized that is not, probably would not fit into our portfolio in the current business, and you would either have to spin it out into a separate vehicle or join up with a partner for that. However, by looking at these projects, we have realized that there are more localized, almost call it hotspot areas with higher grade, that we can do potentially in the same models as our current Sylvania model, where it's a low capital investment. You can put smaller concentrators, a similar size to what we have now and have experience in, produce a saleable concentrate similar to our current operations that we can then produce to offtake of the existing smelters. And if these studies prove to us that we can unlock the value in that way, in line with our current risk appetite and business model, then we could look at advancing those. If it doesn't, then at least we have determined the value to ensure we get fair value if we decide to either spin it out or sell any of these projects. But that would be our focus for the next year, and hopefully in about 6 months' time we can shed a bit more light on this. In terms of our license to operate, always in the mining industry, important for us to focus on that. And specifically under the current environment is our relationship with the host mines, that we maintain that excellent relationship, engaged with them in a synergistic way to see how can we add value to each other, manage the increase in community expectations, which after the effect of COVID, many people in our neighboring community have lost their income and jobs. So there is always that increasing interaction. And, you know, in terms of the tailings dams that we have to construct earlier, as Leanne said, is to ensure those studies and the permitting is done in time, which we are well in progress with. In terms of growth opportunities, is specifically looking at exploring potential new PGM treatment opportunities. We always talk to the potential miners who have PGM or chrome tailings or PGM tailings available. Unfortunately, under the current PGM market, that is one of the, as you would think it's an opportunity, it's also part of a deterrent, because current owners of dumps want to value the potential on the spot price rather than a long-term pricing. And when you build a plant or operation that they have to recover or treat a dump over a number of years, you have to be more realistic in terms of that. But we are engaging and exploring potential in that regard. And there are some areas that we hopefully also in the next couple of months could make more progress. In terms of the open cast and underground sources I mentioned here, those are some of the potential around our host mines, that while at the mines where they have reduced the throughput, there might be opportunities for cheaper contract mining on open cast resources and some of the other assets. And we are in negotiations with them on how best to utilize that. And then lastly, and that always has been part of our strategy, to continue to look for opportunities. How do we diversify? I think everybody always asks us is, are we open to other commodity or geography diversification? And yes, if it's in line with our strategic model and can benefit from our skill set and expertise, then it's certainly something that we would consider. I think that brings us to the end, and I'll conclude just with this last slide. And you would say, why Slovenia? Why am I staying invested here if you're an existing investor, or why should I invest here if I am a potential new investor? I think, first of all, we would like to believe we have proven that we have energetic and competent leadership. We have significant industry experience and a proven track record in terms of all the way from identifying, developing, and designing these operations to building and executing it, and then managing it very successfully, to ensure we remain a low-cost producer with one of the highest industry margins, that we maintain a low-risk business model, and a lot lower than primary miners with the underground exposure typically, and therefore that we can remain sustainable and profitable in terms of operational outlook. And having zero debt certainly helps to achieve that in the long run. And then especially from a shareholder perspective, that we maintain a shareholder-friendly corporate strategy where we generate positive free cash flow from our operations. We are disciplined in how we allocate our capital and fund our expansion projects from the generated funds. We're not coming back to the market to ask for more capital. The last share capital raising or issuance was done in December 2009. And then the company now are paying regular dividends to the shareholders. And we will hope to maintain that and grow it as the company grows. So I thank you very much for that. And I think we can see if there are any questions.
Thank you, Jaco, and thank you very much for a great update there. That's great. Ladies and gentlemen, do please continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. And I'd like to remind you as well that recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard on the Investor Meet Company platform. Lastly, just before I hand back to Jaco and Luan, I'd like to remind you that your feedback is very important to the company. So do please take a moment to give your feedback post this presentation. Immediately after the presentation has ended, you'll be redirected for the opportunity to provide feedback in order that the company can better understand your views and expectations. Jaco, we've had a number of questions from investors today. Perhaps I could just ask you a selection, just due to the number that we've had through. And I'd like to remind investors that the company will review all questions submitted today and, where appropriate, publish responses on the platform. Jaco, perhaps I could just direct this first one at you, if that's okay.
Okay.
Can you advise estimated lost production as a result of power supply issues, and what substantive actions can you take over the next 12 to 24 months to alleviate those power supply and infrastructure problems now that you have a substantial cash pile?
Okay. Look, as I said, I think the power problem is probably going to stay with us for another year in terms of the utility. But as I mentioned earlier, I think with the scale down of the operations, there is also a bit more power available from our host mines. So we hope that impact will be less. However, if we think about the past year, the net power, the ounces production lost due to power, I would estimate between 800 and 1,000 ounces is the net impact. So we've lost about 14,000 tons of treatment throughput during that period. So while it is significant, if you compare it to the impact of COVID and the more other things, it is luckily not catastrophic. We have at the plants that have been most recently affected during the past few years, Tweefontein and Ladex, particularly on the eastern limb, we have already installed standby generators. And in the case of Tweefontein, for the past 2 years already, because of the demand issue there, we've a couple of hours a day we're running on standby generators. It's diesel generators. It is, however, important to note that your diesel generating is expensive and typically runs at I don't know, I think at about rand 50 to 4 rand a kilowatt hour. So that equates to, I think, 22 to 28 US cents per kilowatt hour, which is very expensive compared to about 1 rand to 1 rand 50 per kilowatt hour for the Eskom power when that's available. So we don't see diesel generation as a sustainable long-term solution. However, for emergency power, we have the generators. We are looking at possibility of renewables like solar power. And if you want to do it yourself, the capital, unfortunately, is quite high. But we have been approached in contact with some suppliers who would, based on a lease agreement or an offtake agreement, can install power. And we're exploring a couple of those options. It is significantly cheaper than the diesel option. And I think with the government during this past year now announcing that they would be more amenable to the mining industry generating its own power, the opportunities and the options opens up a bit more. So we continue to explore those, and as I said, where we feel we have the biggest risk or exposure, there we've already put diesel generators in place, and then we will consider what are the options for a longer term outlook in terms of sustainable renewable energy.
Fantastic. Thank you very much indeed. Right, next one we've got here. The share price is significantly below where it should be according to the cash position of the company. Will the directors be taking steps to promote the company, etc., to change this? Also, what is the intention for the significant cash pile the company has?
Yes, okay. So I think let me maybe first talk about the share price and what would the company do? And a lot of people say, what is the board doing to promote the share price? And while we all would appreciate and a lot of our senior management and board members also have shares in the company, so it's in our interest as well if the share price do well. It's also to be responsible in how you act around the share price. I think first of all, what we believe is our role is to ensure that we run the company professionally and and that we have good management, good governance in place, so that we can deliver on our promises, that we maintain disciplined and efficient capital allocation. We continue to generate profits from the operations and keeping our costs down. And then obviously that we pay dividends, and depending on how the opportunities arise, that we continue with share buybacks. So those are things we believe we can do, and also obviously not raising capital, not coming back to the market and ask them for more capital. So those are things we can do in terms of also, I think that can promote it a bit further. And some people have criticized, say, okay, maybe you don't do enough communication. We have just recently, through our PR partners, through Alma in London, have done a perception survey with some of the key analysts in London to try and get some feedback of how they think we should improve, especially in terms of our engagement with shareholders, and how we communicate. So we continue to do that. A perfect example of something like that is specifically this session now. For the first time in the history of our results announcement, we are now engaging on a platform that can give access to a large base of retail investors and give a lot of people opportunity. So it's not just the companies we engage with during the formal roadshows, which we regularly do at result intervals in London. So we try and improve that communication. And I think then also through this communication, and what we recognize is important is that we will focus a bit more on that. And I've mentioned that in the presentation. And I think some of you that have been following the company for a while would see that we have in the presentation already tried, especially on some of the growth prospects and the projects we do, is to give a bit of a clearer line of sight for investors. And we will try, as I said, with a couple of projects we do in the next 6 months to determine where we should go. And I think it's important that we can give better or just a clear direction to the shareholders of what it is we're planning and where we're going. And I think we should do that. Hopefully the share price would also then look after itself. And if there's value that's generated, then if there's more buyers than sellers, hopefully they should be pushing the price up.
Great, thanks very much indeed. Next one we've got here. First, I'd like to say what a great job the company's been doing. Given the large amount of cash the company is holding, in addition to the ongoing profitability of the company, is there plans to reinvest this money into further growth prospects?
Yeah, look, I think we have mentioned that during the presentation as well. Is certainly that we are looking at growth prospects, and the two parts to it is how do we acquire resources outside, similar to the ones we have, to utilize from the same business model, or potentially even infrastructure we currently have. So we are engaging and looking at additional dump resources or adding that to our portfolio, and that continues. And the second part is deciding what is the best appropriate strategy to advance with our current expansion projects. So those are the things we're considering to look at. And as I said, hopefully the studies are underway at the moment, and hopefully in about 6 months' time we can give you a clearer picture of where that would be going. And and if there are projects that we pursue, what would be the size and the magnitude of them.
Fantastic, thank you. Next one we've got here, could you clarify the rationale around the dividends, specifically the windfall payment? Yeah,
look, I think we also I tried to explain that in the presentation. So I think Leanne highlighted the principles around based on our standard dividend policy, what we consider. But we also have decided as a board that we want to be a sustainable dividend payer, and therefore the expectations around the dividend, the normal dividend that we've announced now is in line with our dividend policy and what we can afford to pay out. But given the circumstances around this past year, as we recognize that the cash balance is higher and we have more money due to that was primarily aided by the movement in the palladium and the rhodium prices, we said let's look at that windfall. We recognize it is a windfall to the profits, and declare that as a once-off windfall, something that we can tangibly calculate and allocate to that, and we don't contaminate the normal dividend payments with the additional cash we've been able to generate. So that was the rationale behind that. And as I said, the rationale for looking at the full financial year is a combination that it's a tangible, we can measure it, but also a lot of the cash flow, because of our project pipeline with the smelters. And I think maybe just worth clarifying, Leanne mentioned that 4-month quotational period or our lag in payment. That is not unique to Slovenia. It's actually every platinum company that delivers concentrate and offtake to a primary smelter is subject to that same 4-month quotational period. So because that money for the financial year that had ended already only flows through in the second part of the year, we said let us look at having December as the cutoff date for that evaluation, and then we will look at distributing with our announcements, announcing what that windfall dividend would be when our February-March results, and to distribute in that quarter.
Great, thank you very much. Just kind of conscious of time, but I think we've got time for a couple more. Can you elaborate on the strategy around the exploration assets?
Look, and I think, again, so during the presentation, I said some of it, but I think the crux of it comes down to, as I said, at the scale and the intention we originally had it, I think it didn't fit into our model. It would be large cash and relatively high risk. The smelter technology, although that being fairly standard, the refining technology would be quite novel. It was originally based around the CVMR, the carbonyl vapor metallurgical recovery process, and that was from an industrialization really quite risky, and we decided we want to go for a lower risk project, something that fits the skill set and experience and track record of Slovenia, and that's why we're considering higher grade deposits, more localized, smaller operations that we can do, and to determine what is the real value there. And then based on the outcome of these studies, if it fits our model and it's something we can do in-house, we will pursue that. And alternatively, as I said, if it proves not to be viable and adding value to our business case and the shareholders, then we would look at rather than selling it out or spinning it off.
Fantastic, that's great. I think just on the basis of time, we have answered and addressed a number of those questions we've had in from investors already. And of course, the company will review all questions submitted by investors today, and they will be published on the Investor Meet Company platform. Jaco, perhaps I could just ask you just to wrap up, after which I'll redirect investors to give you feedback, if that's okay.
No, that's fine. Thanks for the opportunity, and I think thanks for the platform. It certainly is very useful and user friendly. I think it's also gives us opportunity to reach quite a lot more shareholders in limited time. And I think in the future, I think COVID brought this about, that we couldn't travel, but I think hopefully we'll receive some feedback to see how the investors feel about it and have experienced this. But I think this would probably form part of our standard reporting going forward, to include this kind of forum to reach more people.
That's great. Look, thank you very much, Jaco Louw. Thank you for updating investors today. As I mentioned before, could ask investors not to close the sessions. You'll be automatically redirected to the opportunity to provide that feedback the company would love to have. If you access this meeting from our website, the feedback page will appear in front of you. If you access this through the link sent in the email, you'll have to log in. It will take just a couple of seconds to come through. But on behalf of SYLVANIA Platinum Limited, Investor Meet Company, thank you for attending today's presentation. That now concludes the session. Thank you indeed. Good afternoon.